U.S.-Canada trade war will plunge Canada's economy and housing market into recession this year. That's the forecast of our next guest, who's tracking the uncertainty that the trade situation creates for Canada's real estate market. We're joined by Tony Stillo, Director of Canada Economics at Oxford Economics, and he's in studio with us right now. Tony, thanks for coming in.
My pleasure.
Your forecasts here, I've just been looking at them. They're pretty blunt. You don't pull any punches. You think that the housing market is headed to a recession this year because of the trade tensions with our neighbor to the south.
Yes. What we're thinking is the tariffs are going to hit the targeted sectors, obviously, but they're big enough that they're going to cause a broad recession. When you have a broad downturn in the economy, all sectors get hit, and housing is not immune.
How much of this are we already seeing? People, homeowners and potential homeowners, read the headlines. They hear forecasts like the one that you've got. How much of a reaction have we already seen in Canada's housing market?
We've already seen the past few months the housing market has turned south. We've seen buyers get nervous. They're worried about their jobs, they're worried about their income security, and they're pulling back, they're retrenching. At the same time, we're seeing listings rise. So there's potentially more distressed sales, people that have to sell. The combination of that is a market that's moved much weaker, much looser, and prices have fallen, and we can expect them to continue to fall.
How much of a price decline will we see in major markets around the country?
Again, it varies across the country, but we're looking for 5% more. Keep in mind, there's a floor to this. We do have lower interest rates. They're stable. We have looser lending guidelines, things that'll prop up. And the governments today, you hear all the different parties talking about different measures to support housing by purchasers. And so we think there's a floor to it. That being said, our housing market is still unaffordable. There's still vulnerability that it could fall more, but our current baseline expectation is 5%.
And does that make homes more affordable? There's more to affordability than simply prices, but lower prices certainly assist affordability.
Absolutely. When we look at that, we look at affordability from a broad perspective. We take a borrowing capacity approach, and so you've got the lower prices are going to offset what will probably be lower incomes and a little bit less confidence. So we're looking for affordability actually to stay roughly stable. There's a wild card into what property taxes do in the different markets, and that adds to the sort of overall carrying cost for a home. But generally, we're looking for stable affordability. What
stock market experts say over and over again about this situation is that the markets want clarity, that the uncertainty is almost as damaging as the end result is. What are your thoughts on that as to Canada's housing market if we get a resolution? We spoke to a guest this morning. She's a senior equity strategist at UBS in New York. She sees a period of uncertainty, a period of negotiations, and an off-ramp, in her words, to tariffs of 10% in the U.S. So all goods shipped into the United States face a tariff of about 10%. If we settle into something like that, and that becomes the established norm, does that inject some confidence back into the Canadian housing market?
I agree. I think it would. And we're looking for, actually, in our estimation, that the U.S. is still trying to leverage something more for the USMCA renegotiation. And so we're expecting the tariffs to come off next year and a few stay on. And that would, elimination of uncertainty, subsiding of that uncertainty, definitely be a boost to the housing market.
What about Canada's population, where inbound immigration has been trimmed significantly?
And that's another cross-current, a number of cross-currents in the economy and housing in particular. And we're seeing population slow. We're expecting, although it might be not on track on the exact timeline the government has set out, but to decline. And that actually takes some of this demand away from housing and helps balance things off. So things are happening on the supply and the demand side.
What are your thoughts on the proposals that have been unveiled by the major parties to boost the housing market in Canada?
Well, we do have a shortage still out there. It's a chronic shortage. Normally, I wouldn't suggest any demand-side measures, because they tend to be capitalized in higher prices. That being said, if we're into a period of a recession where demand is weaker, some of it might be appropriate. I would caution and be quite careful with that so we don't overdo it, because they could capitalize in higher prices later, so it'll just be a temporary reprieve.
Explain what you mean by demand-side measures.
Well, things that would basically be incenting demand, helping demand. So you'd have lower interest loans, things that make housing affordability, housing purchasing more affordable for households. That, in an environment where we still have a shortage of supply, will be a temporary reprieve. Just like our opinion is the extension of the mortgages amortization to 30 years. That provides households an ability to borrow more. But we think that's going to also, in an environment of tight supply, ultimately be eroded for the most part. So it's a temporary reprieve.
Should the federal government get back into the business of building affordable housing?
I think that all parties have to be involved, and we do have to see the supply side grow faster than the demand side over the next decade. We think it's going to take roughly that length of time to do so. So all parties should be involved, the government included.
One implication of the tariff situation is that Canada will impose tariffs on U.S. products as well, already has. That will raise prices of some of those products here in Canada. Is there a takeaway there for building costs?
Yeah, building costs are already elevated, and they would be a little higher, maybe a lot higher. It depends on what we settle on, what you mentioned earlier. But if you're thinking about already our retaliatory tariffs on steel and aluminum, that steel goes into housing and apartment construction, so the costs will be higher.
Okay. Do you see prices tumbling more in the hottest housing markets of the country, Toronto, Vancouver, other big markets?
Yes, I think they're the most likely to, but also the markets that would the local economies that are more directly hit by the tariffs and the trade war. So if you think of the ones that are quite exposed, and I know on the energy front, luckily the U.S. government is talking about 10% tariffs on our energy imports. They'd originally talk about 25. So markets like St. John's and Newfoundland and Edmonton and Calgary, they're quite vulnerable if we do get tariffs on our energy imports from the energy exports to the U.S.
Tony, thanks for being here.
My pleasure.
Tony Stillo is